Did you ever wonder if your passion for Pokemon cards could actually rival the traditional investments? In this video, we are diving into the potential of Pokemon TCG market, comparing it head-to-head with commodities, stocks, Bitcoin, and more. How does Pokemon stack up against the steadiness of gold or the volatility of Bitcoin? Are there also subtypes in Pokemon investing and how they compare to the other markets? We will use in the comparison a rating system from 1 to 10, where 10 is always the best value for each category, and we have in total 5 categories, which are volatility, liquidity, storage and risks, active and passive investment, and annual returns. Okay, the first one is commodities, especially gold. First point, we have volatility. Gold has volatility, but it is usually much lower than in most other financial markets, so we will rate this with an 8 out of 10. Second one is liquidity. Commodities like gold are highly liquid. Depending on which commodity we speak about, the liquidity can be lower or higher, but for gold it is very high. For commodity, ETCs stands for exchange traded commodities. The liquidity is very high also, and these are paper forms of commodities, so you do not need to trade gold in its physical forms, but you can just buy it on exchanges. So we rate this in total 9 out of 10. Then third one, storage and risks. Commodities often require secure storage. This is only true for storing real commodities. For ETCs, you are not required to store anything by yourself. Also, you have here risk like theft if you store them by yourself. In total, we rate this with a 6 out of 10. Then active versus passive. Gold is a passive investment. Only if someone owns very large volumes of it, the storage needs to be maintained and the selling process can become a bit more active, but usually it's also very passive. We rate this then with a 9 out of 10. The annual returns. Historically, commodities grow slower than Pokemon investments, with for gold about 6 to 8% per year, and in total we rate this with a 5 out of 10. Now we have the stock market. We start again with volatility. The volatility in the stock market is moderate, depending mainly on the economy. We rate this with a 4 out of 10. Liquidity. Stocks are high liquid, and especially large cap stocks, you can trade them nearly every time, and in total we give it a 9 out of 10. For storage and risk, we have here no physical storage required. Risk can include market crashes or economic downturns, and so we give it in total a 7 out of 10. Looking at active versus passive, stocks allow you to have very passive investments, mostly via ETFs you can do this, or mutual funds. And so we give it here a 10 out of 10. The annual returns, historically over the last decades, we have around about 8 to 12%, and we will rate this in total with a 6 out of 10. Okay, next up we got Bitcoin. For Bitcoin we have very high volatility. I think only the smaller caps cryptocurrencies have higher volatility than Bitcoin itself, so we rated with only a 2 out of 10 for volatility. For liquidity, we have here very high liquidity. We can sell in seconds, we can even sell on weekends, which is possibly nowhere else, so we rate it with a 10 out of 10. Storage and risks, we have no physical storage required, but regulatory risks, market crashes and mistakes are possible, especially if you have self-custody and store it by yourself, so we rate it in total with a 6 out of 10. Then active versus passive, we have here an extremely passive investment, so we give it a 10 out of 10. Annual returns, we have here only data available for the last 15 years, and also we should not consider the first years, which were the growth very high. So we only conclude the last 10 years, and there we see around about 50 to 100% on annual return. So we rated with a 10 out of 10. Next up we got the housing market. Volatility is here low compared to most other financial markets, so we would rate it with an 8 out of 10. Liquidity, we have here a low liquidity since it takes months to sell properties for their market value, and so we can only give it here a 3 out of 10. For storage and risk, we have required maintenance for your housing and also several risks included, like market cycles, interest rate changes, when you bought it with a bank loan, or vacant, and also more risks. So we can give it here a 5 out of 10. If it comes to active versus passive investment, it requires active management like tenants, maintenance, and so on. Also, selling and buying is very time consuming. So we give it here 3 out of 10 in total. Annual returns, this is dependent if you buy it with a bank loan or not. In general, we can say it ranges from 6 to 20% in developed markets, and we give it 8 out of 10 in total. Now we got the art market. Volatility is here moderate. It depends on trends and also on collector interest. So in total, we have 4 out of 10. For liquidity, we have here relatively low liquidity because you require auctions or niche markets to sell your items. And so we have 3 out of 10. Storage and risks, it requires secure storage and protection, and is also costly to store or have a secure storage. And we give it in total 4 out of 10. Active versus passive, it is active in terms of finding buyers and participating in auctions, but then it's nearly passive afterwards. So we give it 5 out of 10. For annual returns, you typically see around about 6 to 8% for the high-end art, and we give it then in total a 5 out of 10. Now we have the Treasury bills. Here's the volatility extremely low, and we get a 10 out of 10. Liquidity is also very liquid and can be sold very quickly, but not on weekends as Bitcoin, so we have a 9 out of 10. For storage and risks, there's no storage required and almost no risks, so we give it a 9 out of 10. Active versus passive, it's a completely passive investment, and it got a 10 out of 10 for this reason. Annual returns, we have here very low returns, typically in the range from 1 to 5%, and hence it get a 2 out of 10. Now we come to the Pokemon market, where we have 3 categories. The single cards is the first category. For single cards, we have volatility, which is moderate due to trends and also market cycles, and we rated with a 4 out of 10. Liquidity, we have here relatively high liquidity for popular graded cards, but it's hard to sell large amounts of cards at once, and usually you have to provide a discount from the market value to sell within short periods of time. And you still can't then sell large volumes of items within even a few hours or seconds as in other assets. So we give it 3 out of 10 in total. For storage and risks, we have here minimal space required. Can compare it to gold, I think, but you have risk included, like if you grade it by yourself, like grading issues also. Or that there is not enough demand when you sell your cards, and also some other risks. So we can rate it with a 5 out of 10. Active versus passive. We can say that it's passive if we held it long term, but the process of buying and selling could take some time, especially when owning many low value cards. Then you have to do many sales. If you have a high value card, it's not so high effort. But in total, we will rate it as a 5 out of 10. For annual returns, this is also very dependent on the specific cards we will own. In general, we can assume a range from 2 to 20% for high-grade vintage cards, but it depends very on the cards, and we give it in total a 7 out of 10. Okay, the next market for the Pokemon market is the sealed booster boxes. Here we have volatility, which is moderate. It is influenced by reprints and general market trends, and in general we can give it a 5 out of 10. For liquidity, we have moderate liquidity. We have slower sales, but there's steady demand for the sets, and in general we can give it a 5 out of 10. Storage and risk, we have space requirements, and you need to carefully handling it to avoid damage. Also, you need to take care that it's not the theft is a risk. And in total, we can give it 4 out of 10 because it requires a bit more space than single cards. Active versus passive. It can be passive if we hold it long term again, but also the buying and selling process takes a bit time. And we can buy it in large quantities, which is better with single cards from distributors or from resellers. So it's a bit better here, so we give it a 6 out of 10. Annual returns, we got a range from 10 to 30% on average. It's really dependent on the sets. There are sets like Evolving Skies, which have a very high value within 3 years, which make a 5x in a few years, but then are sets which make in 3 years 1 to 2x. And then in average, roundabout per year, we can assume between 10 and 30%. But if you have very good knowledge of the booster boxes, then you can reach the higher amounts here. We give it in total a rating of 9 out of 10. Okay, the last category within the Pokemon market is sealed booster. Here we have volatility, which is moderate, and it's very tightly coupled with the booster box trends. So we have here also a 5 out of 10. For liquidity, it is less liquid than booster boxes, but it's still marketable. And in total, we got a 4 out of 10. Storage and risks, we have similar to booster boxes. Again, maybe tampering is an added risk and you can weigh the package. So we have in general a 4 out of 10. Active versus passive. It can here again be passive if we held it long term, but the buy and sell process takes time. And specifically the sell process is, you need more time than from the booster boxes. So we give it a 5 out of 10 here. The annual returns are typically a bit lower than on the booster boxes and can range up from 10 to 20%. And we give it 8 out of 10. Okay, now that we took a look at all the asset classes and also on the 5 categories, we can now make a comparison between them. So let's start with volatility. Here we see the Treasury bills on the first place and then commodities and housing market on the ranks afterwards. And Pokemon are sitting in the mid tiers with art market and stock market on kind of the same rank. Next one is liquidity. Here we have the Bitcoin on the first place, and quickly afterwards is the stock market and treasury bills. The Pokemon cards are not so liquid, which is a disadvantage of the Pokemon investing. And also art market and housing is comparable to Pokemon investing here when it comes to liquidity. For storage and risk, we have treasury bills on the first place and Pokemon also in the mid tiers. But we have not so huge difference here over all categories. So I think, Pokemon is aligned with the other ones. Then active versus passive, we have stock market, Bitcoin and treasury bills on the first ranks. And then commodities on the second place. Pokemon is then on the same line with art market. And the sealed boxes are in general always a bit better in all categories without storage. So we can say for the Pokemon market inside, we have the sealed booster box, which are the best ones for investment purposes, and then the other 2 categories behind it. But for active versus passive, Pokemon is not the best one since it comes with effort in selling and also buying. So other assets are better here, but for example, housing is even more active than this. Then for annual returns, we have like Bitcoin on the first place, but quickly afterwards we have Pokemon sealed booster boxes on the second place and then sealed boosters as well on the third place. Here comes, it's very dependent on which booster boxes you buy. If you have like good knowledge of the TCG and you only spend your money on the very good sets, then you can make a really good return and better as in the stock market. But also, if you have housing market quickly behind it, have also a 7 like Pokemon single cards. If you use debt, you have nearly like the same return. Or you can also have, if you highly make active decisions, you can get more in return as in the Pokemon business. But I think in general, the returns rates are really good. And if it complements your collecting, I think it's a good thing to have, also like investment perspectives, that it's good on this side as well. In the end, we can now ask ourselves the question, is Pokemon its own asset class? And Pokemon cards combine traits from several asset classes, making them a fascinating hybrid investment, mainly from 2, which are commodities, because they are tangible with value driven by scarcity and demand, much like gold or oil. And art, Pokemon cards carry cultural and emotional value, and it is appealing to collectors through nostalgia and the unique artwork. So they are comparable to those both types. But Pokemon isn't just a mix of these categories. It stands out as its own collectible asset class, I think. And what makes it unique is the active community and steady demand for both vintage and modern cards, creating a dynamic market unlike any traditional asset. And every market comes with its pros and cons, and Pokemon is no exception here. It's not about finding the best market, but understanding what aligns with your goals and also the risk tolerance you got. And hopefully this comparison has clarified the unique features of each market and where Pokemon fits in your investment strategy. Let me know in the comments if you're investing in Pokemon, how you compare it to other markets, and what your strategy is. Don't forget to like and subscribe for more insights into Pokemon TCG and financial markets as well. And yeah, have a good one.